find a way out if it's true. We'll feel alive and the sun will shine. I wanna help your mind. Stripped our clothes all along the beach, held each other's hands and jumped into the sea. I'd rather wait for a healthy you. I found a way out of here, it's true. We'll feel alive and the sun will shine. I wanna help your mind.
Welcome. We are back. All right, it's a boring market right now, but I'm going to explain why the price action right now is very important and why we're stuck here. What's behind all of this? Let's get into it. I'm going to be starting off with crypto, then going into other markets, and then we're going to talk about stocks. So this is a price action, and understanding this price action and being patient with this price action is what separates beginner from advanced traders. All right. This is a pattern we see quite a bit in the market. To me, it looks like it's just about starting, and it's going to test some people, in my opinion. It's going to test some people. So let's see what's going on. Let's get started with crypto. Bitcoin currently at a make or break area. This used to be a pretty important resistance. It flipped into a support in the beginning of February, and now you're retesting it. So if you look at these two zones just as a channel for right now, you're at the bottom of that channel. Going over to the 4-hour chart, you're still in this wedge. You can see it was support here February 12th, resistance here January 17th, resistance last November, resistance last August, very big level here at around 21.6K. So that's all that's being tested for Bitcoin right now. Ethereum, I'm starting to lose hope in this inverse head and shoulders. This is kind of like the final place where you could have a parallel right shoulder. And I don't know, I feel like the move should have happened here, in my opinion, if that pattern were to play out. So there's still a slight potential for it, but not a lot of advancement over here. Let's move over to other markets. The US 10-year continuing to consolidate just above this resistance. It's okay for right now. Crude oil kind of selling off, bearish engulfing on Tuesday, continued lower today, just continuing on in that consolidation triangle. Then we've got gold, doji candle today, nothing really changed. Same thing for silver after flushing yesterday. And then finally, the dollar currency index. You know, it had this breakdown of this wedge. It had that hidden bearish divergence, but it's starting to get invalidated for right now. You've broken above that wedge at this point. No longer any potential for hidden bearish divergence because you're making a higher high right now. So you're simply just testing this level, which you can see was a high over here, some support over here, and a high on January 6th. And before we get into stocks, I want to look at the VIX as well. You can see over here, you're starting to get a little bounce off of 18. Again, it feels like the VIX has been broken to me really since like the end of last year. But if we are going to zoom out and look at the bigger picture, you're trying to double bottom at the bottom of this range. So that is a little bit concerning for stocks right now, but that's really about it. So let's talk about what's going on in the market currently. Very quiet day today. Not a lot of price action. You just kind of went sideways after that large flush yesterday. And if you watched my stream during the day yesterday, the easy way to look at this is you're just consolidating and going sideways in this zone. You've been doing this since pretty much the middle of February. You have a strong zone of resistance just above you, a strong zone of support beneath you. You are literally right in between them, completely at the halfway point. So to me, this looks like market distribution. You know, we saw a lot of phases take place. It was kind of one after another for months, pretty much the second half of last year. Until now, we saw a downtrend, uptrend, downtrend, uptrend. Now it's a little bit tough because on one hand, you are seeing a short-term downtrend. You haven't broken above these highs you put in at the beginning of last month. On the other hand, it's still a long-term uptrend because you're making higher highs and higher lows. So you're in this area where neither bulls or bears can find any control. And what I talked about yesterday on the stream was that this could lead to weeks of boring price action, of sideways, of a lot of nothingness, but this is very important. This is going to tell us whether or not this larger breakout we saw take place in the beginning of the year from this descending Browning wedge, which was your bear market pattern, is real or not. And it's a very real pattern. You have probably 4 touches on both of the trend lines. Let me make this one the same color just so it's kind of same thing. All right, you have large touches on both sides of that pattern. You're out of it to the upside, and we made that nice initial push higher, and then you faded it. So you got your bounce off the 200-day moving average, but you really failed to kind of break out of this little pattern and do much, at least for right now. So if we're just looking at this smaller wedge that we broke out of, it kind of just played out immediately, and now you're back down. So it doesn't really matter too much at this point. And if we get on to lower time frames, you can see over here, there's just a lot of technicals not really mattering because there's bullish and bearish technicals, right? You have some bullish things, like on the daily, you bounce off the 200-day moving average and the support zone. You have some bearish things, like you're back under this demand line of this upsloping channel. And neither of those are really being respected. Okay, if we go over to the 1-hour chart, in my opinion, the 1 hour looks pretty decent. You've got this little bullish engulfing candle to close the day. You've got hidden bullish divergence on both the MACD and the RSI. Probably a little breakout taking place here as well. So on lower time frames, you could see like a short-term bounce. We filled this gap up from last Friday, and going into tomorrow, maybe Monday, you could see an extension of this bounce if we can continue to hold these lows. We put in it around 396.6. Got 3 different bottoms there before a nice little spike at the end of the day. And even if we draw out like a 15-minute pattern over here, you can see had a nice little breakout into the close. So this is nothing major, but it could take us back up to retest some of these zones you can see above on my chart. But overall, this is the part where until we get a larger signal, a bigger pattern, there just isn't really much to say. And the technicals are just displaying that. We're stuck right now. The market is stuck in this zone, and until we're out of it, it's probably going to make for a pretty tougher trading environment, at least for swings. You know, day trades, you might get your little 5 and 15-minute patterns. Those might trade pretty well, but it's going to be tough to swing short or long as long as you're within this range. For the majority of stocks, of course, there's going to be other names running on news and stuff. But this is the part where you just have to be patient as a swing trader, as an investor. Pretty much anything but a day trader or scalper, you have to just kind of sit on your hands. And I'm not telling you that you can't trade, I'm just saying, and just watch to see where we confirm. That's all that really can be done right now. And the people who aren't patient, in my opinion, with this type of price action, it's just going to really mess with you mentally, because you're going to try flipping back and forth and nothing might not work. And then you just kind of give up. But if you can just wait for us to actually correct and confirm a move, it should be pretty easy from there on out. But we had a really good time for bears last year. We had a pretty decent time for bulls since pretty much Q4 to Q1 of this year, Q4 of last year to Q1 of this year. We've seen both sides of it, and now we're just kind of in this area where it's hard to tell. There's no technical formation, in my opinion, that's really screaming out anything. You know, if you go over to the weekly time frame on the SPY, you do have this descending broadening wedge and back test, right? But what if we delete all of this and then look at it as a bear flag? That's another way to view it as well. So it's tough. It is tough to find a technical on higher time frames that can give you a reliable signal, at least for right now. So the market is stuck because there's no technical indication, because there's really no winning side for right now. You're going to have technical variables when one side is starting to win over the other, when there's an imbalance between demand and supply. Moving over to the Qs, kind of the same thing. In my opinion, this comes down to either do you break out of this broadening wedge first, which would be good, or give up those lows around the 200-day moving average, which would be bad. So one of the two will happen at some point. It is a certainty. That is a certainty. You will either break out of this pattern or break under the 200-day moving average at some point in the future. No clue when. But again, it's just a game of waiting until one of those two things happen. Whatever happens in between, in my opinion, is just chop. You know, maybe on lower time frames it's tradable, but on higher time frames, it's just a 50-50. It's a coin flip. That's all it is. So that's the Qs. I mean, on lower time frames, it's kind of the same thing. I do like how you are somewhat holding the zone. A lot of resistance here from last June, last December, and then even recently in February. That might be flipping into a support again with the hidden bullish divergence. So again, the lower time frames are looking better. If you can just cement these lows from the last 2 days and kind of continue to bounce off of them, that's good. You can also see that at this high, we pretty much just filled this gap over here. So that's probably the big level, 303.2, to see if that can kind of get reclaimed if we do get a bounce off this little hidden bullish divergence and wedge and bullish engulfing on the 1 hour chart. So those are the Qs. ARK ETF flat today. I'd like to see it break out of this, but again, it's just a question of when. I think it should break out of this wedge at some point, unless it just starts dumping like this. But at some point you can break out of this wedge, and then probably the tougher thing, like let's say it starts to do something like this. The tougher thing would to be getting back above this area, because it is a horizontal level and also the 200-day moving average. So again, patience is necessary. That's really what it comes down to. You've got the Russell 2000. Also in a wedge, it failed to hold above 188. It was so close. You got 1 day of confirmation, and then you just kind of rolled back over. At this point, I'm just going to look at this more of a down sloping channel, because you didn't really do much on the wedge breakout. And that's what I was saying earlier. It's like you're going to see some technicals on both sides, but until you really confirm the move breaking out of this range, it's going to be tough to really rely on them with a high probability. So the market's just stuck for right now. I don't know. There's not much else to say. Let's see if there's some variables on individual names. There are times where the indices just go sideways, but you can pick out certain sectors that look better than others and catch moves in those. So just because the SPY and the Qs and maybe even the Russell go sideways for some time longer, doesn't mean you can't find trades. There still could be trades. Let's take a look at the swings for right now. We've got Square still broken out of the cup and handle. It could come in for a back test maybe, and on like lower time frames, create a little bit of a wedge here as well. A lot of 1 hour hidden bullish divergence developing. So the variables aren't too different there. RIOT continuing to hold above the 200-day moving average, even though it's down a little bit after hours, but the overall picture is still there. Despite what's happening in the overall market, a lot of these names are still just kind of holding their own variables. CHWY, the same thing. Nothing really looks that different here. So the swings look the same. Nothing too concerning on them for right now, technicals wise. Let's take a look at some large caps. We've got Apple over here. On the lower time frames, this might kind of start to develop a right angle descending broadening wedge. We've got this demand line and then some supply around 157. So just waiting to see which way that breaks. I do like how it came right back down to fill this gap. That helps out quite a bit, because instead, you'd rather not be testing this breakout over here with that gap to still fill. So at least on the next time it does go to test that breakout, you're not going to have a gap unfilled beneath you. Let's take a look at Tesla. It did break down from the range. Shout out to Cheddar Freeze for warning about that potential distribution. So I had these levels charted out. It was in this range over here, broke down, went right down to that next level at 179.9. You can see that's high over here, a couple of lows over here, and if we go way back, this low from March of 2021 and December of 2020. So that was your next level. You literally went straight down to it, and you're getting a small bounce off of it. I did chart that out yesterday on the morning stream. So the range breakdown played out. At this point, you still have the potential for hidden bullish divergence. Really, it's probably going to happen, because to invalidate this hidden bullish divergence, you'd have to break under 102 before getting any sort of a rally. So I would probably just wait to see how this MACD continues to develop. You've also somewhat got on the RSI as well, a lot of hidden bullish divergence. And this could still set up like a larger inverse head and shoulders if you zoom out. And more short term, maybe a little bit of a wedge here as well. Let's make that actually on the 4-hour chart. And that's pretty much your wedge. So there are some variables at this point. I think the breakdown happened, so now it's just hoping that it doesn't really do too much more, and then it allows for maybe this wedge, this support, and the oscillators to give you a little bit of a bounce. And if you do end up breaking that 180 level, then the next level is down at around 166.42. You can see that lines up with the high from September of 2020, and then it was also this low over here, and then kind of this low over here. So those are your next levels for Tesla. Let's say it does drop down to this area. If we're going to use this gap up low as an anchor point for a harmonic, then you could get a bullish bat, right? Somewhere around over here, bouncing around these lows, you get a little bit of a bullish bat. Maybe the hidden bullish divergence completes then too. Everything is possible. You could even break out of this first rally and then head lower and then actually get the move, create the inverse head and shoulders. Again, patience. Let's see how the data files. Meta. Pretty 50-50 here in my opinion. You've got hidden bullish divergence on the daily. I don't really see much on the 4-hour. Maybe you could kind of look at this like an inverse head and shoulders, but you would kind of have to hold this low from today to really cement that. Amazon. Hidden bullish divergence on the daily. A good amount of names are showing that, which is pretty nice. You did break out of this wedge, so I think Amazon still looks fine. You can hold above this little support zone over here. So again, there are names that are still showing the variables. The market could go sideways and Amazon could still do something like this. It's possible. Got Google. This one's just kind of whatever to me right now. I like the slightly higher lows. That is good. I think it's just all about continue to hold this zone. This is your very critical zone between 86 and 90. As long as you're above that, I think it looks okay. And then if we kind of zoom out over here, you can see you broke out of this downsloping channel. Got an initial move to kind of test the 200-day moving average, rejected it, came back down to the support, bounced, and now you're retesting that breakout with hidden bullish divergence. So it's not bad, Placing a stop under this zone probably would give you an equitable trade with a good reward to risk. 10% risk, going for maybe this resistance would give you the reward to risk. But of course you'd have to kind of break out of this before even thinking about that target. But just kind of messing around for right now, looking at potential moves. NVIDIA chips have really been the ones that have kind of impressed me. There was this little level going into the week. Right over here, you can see there's a small resistance from the past week. NVIDIA was able to close above that today. It wicked above it for the last 2 days, and today was able to actually close above that. So again, not much resistance here till 258. I talked about this yesterday on the stream as well. Volume starting to grow a little bit with this move. Not horrible. I mean, if we go on to like a 1-hour time frame, then it just looks like a... Well, there's two ways to look at it. One way is a right angle descending broadening wedge. You're testing a breakout with a partial decline, which means a 70% chance of breaking out over here. And then the other way is you just flip this demand line from that to this and look at it as an ascending triangle. Either way, there's still that potential to it. Then we've got AMD, also another chip name doing pretty well. This was one that I did share going into the week on Twitter on my watch list, as you can see over here. Got a nice little bull flag set up on the 4-hour chart, and this is what it looks like right now. It's broken out, it's making that move. It even got above this little gap fill at 84. Not much resistance till $89 now. So there's still names. If you can find like the strong looking patterns, they can for sure still play out. You had triple hidden bullish divergence there as well. A bounce off the 200-day moving average. I mean, it was a pretty nice setup going into this week, and it's had a pretty good week accordingly, right? Even just going over to X, you can see like there's just some sectors now, like energy and stuff, that along with the market, they're just kind of going sideways. You've got XLE, the energy select sector, rejected that cup and handle breakout. So it's just in this little tight zone between the 200-day moving average and this trend line / supply line. There was a CLF swing I alerted in premium not too long ago, and it went almost up to the second target, but now it's been pulling back. So you're still getting the moves. There's swing a bull, like this did hit at least the first target, you know, from the alert to the high one of about 15%. That's not bad at all, but you're not really seeing those extensive moves that we saw like back in January and stuff, because again, the market's just starting to kind of flatten out, go sideways. So you can still find the moves and variables on individual names, but if the market is not giving you the correlation to that, for example, if you're going long and the market's not giving you bullish price action, and by the market, I'm just referring to the SPY and the Qs, or whichever index relates to the individual stock that you're trading, if the movement of the stock is not correlated with the market, you might not get the extent of the move that you'd be used to on certain breakouts or patterns. So you can still find them, it's just not optimal, and that's all it is. And I think it's really important to note when times like these come, like it's okay, take your foot off the gas pedal for a little bit, regardless of if you've started the year not so great or great, and just wait. You know, there's still 9 months left in the year for you to get a good P&L. And remember, all that really matters is not how you're trading day to day and how you did yesterday or the day before. It's how things look at the end of the year. So just give yourself time to wait for those variables, to be patient, to keep mastering this craft and learning and stuff. And then when we get more variables, I'll be able to share them, but there's just not much else to really speak on right now. We can look at our classic Fisker and CLOV now. Fisker still kind of looks like Wyckoff accumulation to me. Just it's super important to continue holding above 651. The way I have this wedge drawn out, you might be retesting a breakout and a back test. So it would be very important for this potential Wyckoff accumulation over here, or Fisker to start getting a bounce off that back test and getting out of here, because it's been here since last September. Like, it's really been going sideways. If you think 3 or 4 days of the market going sideways is crazy, look at what Fisker's done since like last October, or even more so last May, almost a year at this point if you consider these lows, which are not even that higher than the current price. So the variables are there for Fisker, but again, what does Wyckoff do? What's the whole entire thing about Wyckoff? It makes you wait. You have to be patient. The composite man, the composite operator, is a very patient man. That's why he wins. All right, then you've got CLOV back under $1. You know, I charted out this cup and handle, but I was saying every single time you looked at it, like it's not really much of anything. I'm just kind of looking at this for fun right now. So, you know, not much here still. Yeah, I still look at it every single day on the stream, but again, there's just what do I really talk about? I think probably the biggest picture here would be hopefully you hold this low, and then you never know, the longer term double bottom is possible. It would definitely be much nicer to bounce twice under $1 than just one time and then start moving up. So if you can do that, that would be nice. I hope we're looking back at this chart in a few months and it makes some sort of a move like this. Well, you're probably going to need some news to go alongside that, because a lot of news brought this down. You're probably going to want / need some good news to bring it somewhat back up. Not even talking about like these lows, just for even these ones. So that really is that. RIVN, take a look at this one. Yesterday it gapped down and was down about 15%. Let me see if there was any news. Here we go. RIVN drifts lower after fundraising haul announcement. The company is seeking to raise about $1.3 billion, even as it ended 2022 with $12 billion on its balance sheet. So you got a gap down yesterday off of that with pretty large volume. But you got almost a hammer candle today. The body of the candle just a little bit too big. So there is some interest in this name on both sides because of that. It's popping up in my TradingView scanner. Let's see if there's anything else going on. Got AMD up 4%, NVDA up 4% like we looked at. Those chip names doing their thing. Intel's had a pretty solid little bounce off the bottom of this triangle pattern. MACD's flipping back over to green. So it's not a horrible reward to risk. I mean, I guess this would be more of a bearish pennant because it's happening after a leg down. But, you know, with a stop under these lows, it's not a huge risk. But again, you know, the probability of it continuing to reverse trend, or at least starting to reverse trend, we will see. So that's really it. It's tough to even stream when the market's like this because there's just not a lot to talk about. Like, I'm talking nonstop about being patient and waiting for variables. And I like to come on the stream to talk about what variables are taking place on charts in the market, but there just really aren't a lot right now. So that's really it. If anybody in the chat has any ticker requests or anything you want me to look at, talk about, feel free to drop that in the chat. Hit the like button, hit the subscribe button. Remember, if you're not in the Discord, link is in the description. It's free to join to get all of this stuff except for the stuff in premium. If you want to join premium, that's the pinned chat. That link is also in the description. There's one lifetime left that is available. And our news of the day from Anna is that the $2 billion Powerball winner bought this house. All right, so here are some ticker requests. First off, we've got IREN. There's not a lot I can do here except really like chart out the levels, which are those. And yeah, I don't see much of a pattern. It is curling like a little bit, but it's down after hours. Potential hidden bullish divergence. It just needs more data for me to really be able to say anything. MMAT, I don't like how it broke under this low from last fall. That's very, very crucial. Still has a little bit of support. I mean, it could really just bounce anywhere here. This is a pretty large zone of support. So that's pretty much the area that you really want to reverse off of. So I don't know if there's anything else under that. Yeah, it stays all the way back to 2015 too. And yeah, that's pretty much it. So your final zone of support that you're testing once again. And you do have a little bit of classic bullish divergence on the MACD. Your RSI is oversold. We'll see how the earnings go. And you've got Palantir. Not much to talk about right here. You've got hidden bullish divergence. You're just testing the 200-day moving average in this $8 level. You can see it was resistance over here. It's trying to flip into support. This bullish engulfing candle was pretty nice on March 2nd. So that's probably the low that you really want to hold above overall, right over there. TRKA, really nothing to do with technicals on this one. I don't know what news, maybe earnings or something is moving this. It's just not really a name that I could do a lot of technical analysis on. Yeah. ROKU, testing the 200-day moving average. This was a swing. It hit the first target only, but it's using that 200-day moving average as resistance. It was trying to break out of this inverse head and shoulders. It got the initial breakout, but now it's kind of back testing. So you did get a hammer candle today. That is good, but it is crucial that you get fall through price action. And again, on back test, I like how it's back testing. It filled this gap, trying to flip these resistances into a support. Hammer candle, so far so good. But the most important thing is getting the price action after the variables. This is your back test. This is the make or break area for continuation in that inverse head and shoulders trade. You've got the potential for hidden bullish divergence. You want to see it move off this now. You've got not one, but two pretty large lower wicked candles right over here. Literally the variables for a back test are in at this point. Now it's time to see if the price action follows through or not. BLU. I've got a bunch of levels charted out on this one. Might be testing a little bit of a breakout here. You have this wedge pattern. You broke out of it yesterday. Today you back tested it, just like I saw on the last one. Once this is in, you want to see the move take place quick. You don't want to be back testing like this for a long time. That could just kind of throw you back into the wedge. So crucial that it kind of shows you the fall through price action over the next few days. And even more crucial that you hold 733. That's been your support since you tested it in the beginning of the year. So those are the taker requests, and that's pretty much going to be it. I know it's a quick stream. It's just like, what else do you do? The market was pretty much flat today. I'm trying to get as much out of it as I can. And when there's more to talk about, we will do so. So thank you for watching the stream. Thank you for all the support. Like I said, there's one lifetime spot left for premium. It's less than 2 years of annual, right? Less than 2 years of annual, comes with the one-on-one class and the potential to join Champs Circle. We're actually doing a call tomorrow evening. Me and 4 of the traders in the Discord. So if you want that, it's a pinned chat. Go check out the websites, read everything, make sure you see what everything is, and if it makes sense for you or not. Would love to have one more person join us in our monthly calls. So thank you. See you on the next stream, and peace out.
Now, the present is the only real time. There is no past. And there isn't a future. And there never will be.